All right, why don't we kick off? I'll do my usual intro. Hello and welcome, everyone. Thank you for joining the Wall Street Blockchain Alliance webinar, public global webinar, Understanding the White House Framework on Digital Assets. Earlier this month, the White House published its first ever comprehensive framework, quote unquote, for the responsible development of digital assets. This alleged framework outlines the findings across multiple government departments as mandated by the presidential executive order earlier this year. I think, Dina, it was March of 2022, if I recall. In this session, our panel of experts from across the WSBA global membership will discuss their thoughts on the framework. We'll discuss what next steps might be and what the future of crypto will look like in the United States. Before we begin, a little bit of housekeeping for today's session. This webinar is being recorded. Attendees will all be in listen-only mode. All attendees are encouraged to submit your questions during the session via the Zoom chat function. We'll get to them towards the end of the presentation. We will reserve time at the end as well for written responses to some of these also. Please keep in mind this event is offered for general information and educational purposes only and is not intended to constitute investment, legal, tax, or accounting advice. Josh, how many lawyers do I have in my life at this point? Any views and opinions expressed during this event are those of the participants only and do not necessarily reflect the views of the Wall Street Blockchain Alliance or of our participants' firms. So with that out of the way, welcome all colleagues. Thank you for joining us. Let's do some brief introductions. Those of you who don't know me, who are attending, my name is Ron Quaranta, privileged to serve as chair of the Wall Street Blockchain Alliance. Josh, let's start with you. If you want to say hello, tell us who you are, tell us who you work with.
Thanks so much, Ron, and thank you, everyone. So I'll keep it brief. I often say I wear a lot of hats, and one of my favorite hats is chairing the legal working group of the Wall Street Blockchain Alliance, and I'm also a board member. Apart from that, I'm at Linklaters, which is a global law firm, and my role is U.S. head of Fintech and head of blockchain and digital assets. I also co-head the global tech sector. Thanks, Ron.
Josh, thanks. Dina, over to you.
Sure. First, Ron, I want to thank you for giving me the opportunity you and the Wall Street Blockchain Alliance for giving me the opportunity to speak today. I'm grateful for it. And for me, I also wear a bunch of different hats, but I am in the fintech practice at Hastings, and I do a lot of both government affairs work, strategy, advisory types of work. I also am an advisor to a bunch of startups and serve as on the advisory council for the Wall Street Blockchain Alliance. I'm a little bit different than everyone else, I think, on this call because I'm going to be showing you things more through the political and policy lens than from the quote unquote legal lens. And that's because I spent most of my career working on House Financial Services, Senate banking, and Treasury. So what I always say to people is I spent many, many years writing the laws, and then other people screw them up. So I'll be giving you sort of a different flavor in terms of my analysis.
Dina, you might be one of the people who educated me by telling me everything is politics. So it'll be interesting to hear your perspectives. Mr. Canty, how about you, sir?
Great to be here today, Ron. And again, just to echo those thoughts, great to be a member of WSBA and to be part of an event like this where we're able to spread some of the knowledge and news that happens. So again, my name's Kell Canty. I'm CEO of a company called Ledgible Crypto, where we have platforms that help some of the largest and most sophisticated entities in the world be able to account and pay taxes and calculate all the obligations that they need on their cryptocurrency. I've been involved with crypto and Bitcoin since 2013, was a founding member of the Bitcoin Foundation Regulatory Affairs Committee, and not a lawyer, but as obviously it impacts the industry quite a bit, I tend to keep up with it.
Good to see you and good to have you here, old friend. And Mr. Callahan, welcome.
Great, thanks, Ron, for inviting me to have me on this panel for the WSBA. Again, my name is Bill Callahan. I'm with Blockchain Intelligence Group. It's a cryptocurrency and blockchain analytics and forensic company where we track and trace transactions on the blockchain, cryptocurrency, NFTs, etc. In my prior life, before joining Blockchain Intelligence Group, I was with the Department of Justice as a special agent with the Drug Enforcement Administration, where I specialized in money laundering cases, worked alongside of a number of the organizations that have been cited in the in these reports and in the fact sheet here. including FinCEN and Treasury and IRS as well. So thanks again for inviting me to the panel.
Thanks, Bill. Good to have you all. So I want to kick off like I usually do. We make this very conversational. Again, all attendees, please certainly start asking your questions in the Q&A. We've got a little bit of the benefit of some distance from the release of this kind of comprehensive framework. And I remember when a lot of colleagues saw it, they said, you know, sky's falling, regulation's terrible, United States hates innovation. It may not be that catastrophic, but I want to start with first impressions. Josh, and if I could start with you. You've heard me often say, why are we calling it a comprehensive framework when it's kind of a pile of reports? But what was your first impression, Josh, when you saw this? What are your thoughts about it? And then we'll go through the room and kind of cycle through those opinions.
So my first thoughts when I saw it was kind of that it was as one might expect, right? Because when the reports were asked, when the reports were requested, they were created by the very agencies who are then described in the reports. So when it says things like the SEC and the CFTC should continue to enforce, right? In my view, that's probably because that's what was put in the reports. So to me, it appeared as less of a comprehensive framework, as more of a summary of what the various regulators have said they're working on, what their plans are. I didn't see anything in there that said, regulator, stop doing this, or agency, stop doing this. So that was my impression, more that, you know, the White House is trying to get its arms around what's going on and is continuing to assess things, but largely that the regulators will continue along the paths that they've been going.
Josh, thanks. And I want to expand on that a little bit. Kell, I'd like to go to you as well for the next kind of, what were your perspectives when you saw this? And particularly from a, what I'll broadly call the kind of reporting and understanding of what needs to be reported within the framework of regulations, given what you and your company do, what were your impressions when you read some of this? And I know we highlighted specifically the Department of Commerce report as well, which we can dive into. I'd love your perspectives on some of that.
Well, I'll just echo the thoughts here that, you know, the idea that this is a comprehensive framework is maybe a little optimistic. Maybe it starts setting the groundwork for, you know, common themes that a framework can grow out of, but in no respect, I think that is this, you know, an encompassing one, to not even mention the fact that, you know, two of the primary agencies tasked with dealing, well, perhaps tasked, right? They're still infighting over that. The CFTC and the SEC have not produced reports and are unlikely to do so as far as we can tell, and that the enforcement by a couple of these, and maybe both, are done on a somewhat an ad hoc and you know, regulation by enforcement type aspect. But I would say that a couple of themes kind of broke out to me. I didn't get a chance to read all 9, but I will say that in terms of positive notes and thinking about the technology the way many of the members here do, the Commerce report of the ones that I read was by far the most inclusive and the most forward-looking in terms of thinking about things. Obviously, talking about, you know, the required compliance and the required reporting and referencing the other agencies that, you know, Treasury and FinCEN and DOJ that will be participating in that kind of enforcement and regulations and hopefully laws at some point. But, you know, also saying that this is a global international chance to, you know, work with other countries to be a leader in technology and to advance, you know, the way that we move into the next generation of payments and investable assets and everything, the way that crypto is kind of thought of by all the members here. So in that respect, if you're going to read one of the reports and take something good away from it, I would recommend the Commerce report by far. The Treasury reports that I was able to look through, you know, again, were more of the same in terms of, you know, the potentials for illicit finance and things like that. I will say attacking these framework, or not necessarily framework, but kind of indications of continuing policy themes, as I guess I would term it, that the reporting such as came through with the infrastructure bill around 1099 reporting that obviously our company participates in, as well as some of the things that are going to get reinforced by the Inflation Reduction Act with an allocation of $80 billion to the IRS is going to be really in terms of tax reporting and audits and things of that nature are really going to be ramped up and starting to be looked at a much closer level. And obviously from the enforcement standpoint, if you've seen the recent cases around various banks and exchanges having to report, I think we're getting prepped for more of the same and at a greater scale from those reports.
Kell, and to that point, real quickly on the Department of Commerce report, I scanned most of them. I haven't read all of the reports, but am I correct in reading, I think the Department of Commerce report was the only one that talked about engagement with the industry. I might have missed it in some other reports, but is that your take as well?
I believe that was either second or third on one of the 4 points near the top of the article, wherein explicitly calling out public-private, and collaboration. And again, that's why I'm, of the 9, I'm going to read commerce again, because it kind of lines up with what I think we all think should happen. And, for instance, what happened with the growth of the internet back in the day. I tell a lot of people that, what happened if the United States didn't have particular, there's a tax compensation for internet-based sales, and there was some regulatorily openness to allow the internet and the technology associated with that to grow within the United States. And if we didn't do that, what we're going to do, stick to faxes, where the rest of the world moved on to email and websites and things of that nature. I make that analogy quite a bit, probably more than I should, but I think that's a critical aspect, that instead of it being told from on high, because frankly, the regulators and the agencies don't necessarily, they're getting better, but they don't fully understand the technology, particularly throughout the agency, and the ability for private public participation to have that joint look at what's right for the industry and how the technology actually works. I believe it's crucial and critical. And again, commerce, I think, is the only one I saw to actually call that out as a way to move forward. And I think that needs to be emphasized in the others as well.
Kell, thanks so much. Bill, you and I have had long conversations about kind of enforcement in this space. Same question. What were your thoughts when you saw this kind of comprehensive framework, particularly the DOJ commentary and report? And what does it change from your perspective around the enforcement of laws in the crypto space, if anything?
Right. Well, I mean, what I saw a lot, and I think it goes along to, I think, what Josh was saying, more of what we're doing. Okay, but then I saw some wish list items in there as well, as far as enforcement goes. For instance, increasing the statute of limitations for these cases, an explanation why it takes these cases so long, complex, from a 5-year to a 10-year, or even further out if it involves a foreign jurisdiction or foreign documents or evidence. So, what I didn't see there was something where it either put somebody in charge, it told somebody or some agency or, some level of government, okay, start to coordinate this or bring it together. From a DOJ looking at enforcement, here's some of the problems here, but it was also, maybe I saw some sort of roadmap that they're going to lobby Congress for. In the money service business area for funding. There was a question or a statement about training and increasing the tools and training that the agencies have there as well.
And Bill, to that point, you provide those tools. Other providers do it. Kell, you've got tools within the organization. Bill, are you still surprised at the level of not using the tools that are out there for enforcement? And the reason I'm saying that is it seems that there are still so many regulatory bodies, jurisdictional bodies that don't understand that there are tools for some of this. Can you speak to any of that at all?
Well, I mean, I think when it comes to those immediate crimes that have some sort of national security implication, they have those tools available, right? That they have that training available. When I go to conferences or I speak to law enforcement, on the federal level, it may be a notch down what we're not thinking about every day. Maybe something like, laundering healthcare fraud or PPE and then using crypto. Maybe more of a challenge to get access to it. Many drug investigations, around the country now, dark web type cases, social media involve crypto. And then we get down to the state level. And that's an area too, where we have partners in state law enforcement. That's for getting the message out to. There's training, there's tools for those folks that are investigating these crimes.
Bill, thanks. Josh, I know you just entered a comment that you shared with the panelists. I don't know if you want to raise that here. And Dina, I do want to come to you next, but Josh, I did want to get you back into the conversation.
Oh, sure. I just wanted to mention briefly, yes, it's true. We haven't seen the SEC or the CFTC's report, but, in informal conversations with certain staff of the SEC, it had been indicated, of course, not officially, but just that the belief that the report had been submitted by the SEC by the deadline. So it will be interesting to see whether, in fact, it has been submitted and if and when we get to see it.
Josh, thanks so much. Dina, I want to come to you, and you and I have had conversations, and we were joking before we started that everything is politics. I'd love your perspectives on what you took from the framework, and again, now that we've got a little bit of breathing room from the time it was released to what's been said now, and what is the political backdrop for some of these conversations? Will the election affect some of this? What are your thoughts, Dina?
That's a broad question, but a good question. So in terms of my views on the framework, I have to admit, well, first of all, I see it as in a lot of ways an embodiment of functional regulation, sort of recognizing that this is not just about one agency, this is about the alphabet soup of regulatory agencies and then some. So the 2 days before the report came out on the Friday, I was in the agencies with the SEC and the banking regulators, right? So they were some of them were pretty straightforward about where they're going. And so when I read this, I thought it was horrible and consistent, right? But then I read it later, so I could, have a different mindset. And I saw some positive things in it. So I think it probably makes sense for me to say the positive things first. Because
Yes,
I do see some good things. So first of all, I was going to say that I do think that this report, in a certain way, is this is being led by the White House and the Treasury, really. This framework. I do see this as an appetizer in a way, because the big deal report is going to be the FSOC report that comes out, or the Treasury report on financial stability and systemic risk, which I think is supposed to come out on October 3rd or 4th. So that is a big deal report in terms of what it's going to say, is my take. So the other good things are that, yes, there's a lot of mention of central bank digital currency. However, in the report and in the news media, everyone is saying it's going to take a long time for central bank digital currency. So I think clearly the US recognizes that it's going to have to work with the private sector to get things up and running. And it gives the US time to think about whether it really wants a central bank digital currency. The other thing I saw that was very positive is, and I think somebody else, Kell, I think you mentioned it, was I thought the Commerce Department's involvement in terms of setting standards was a very positive thing. And in fact, there's a hearing in Senate Commerce this week on emerging technology, including blockchain and US competitiveness. I think that's a good thing. And I saw it as, it tries to promote innovation and have the US work with the private sector to take a leading role globally, right? So I think that's all good. On the negative side, I mean, it's like a litany of problems, right? Without solutions. Not to take this like, I don't think it's a joke, but it kind of, when I first read it, I had been gone for a few days. I came home, Josh, and you guys probably know, I have 4 kids. And it reminded me of the litany of complaints. It was like, my one daughter, I don't like my college. Then at 1 o'clock in the morning on Saturday night, she calls, Mom, can you give me money? And then my kids are like, well, we don't like the food you cook. And then they're like, well, why aren't you cooking for us anymore? It's like this litany of complaints. At least with the cooking thing, I was able to, create a new system, which is what kind of crypto wants, which is I've been doing a hybrid of Uber Eats and every once in a while cooking something, right? So it reminded me of that. So, obviously the things that stick out the most from on the negative side is, I would say the biggest thing is, and this sticks out in the stablecoin legislation as well. My biggest concern has always been that a financial activity is regulated more because it is running on a new technology, right? And it is different than anything else, and it does need some shaping on the edges. But so all the mention of non-bank federal regulation, I think that is scary, because payments today are not really regulated at the federal level. And I also worry because I think we're going through, stable coins are going to evolve. And I think that the mentioning of the CFPB and FTC, that's always like scary for everyone. The environmental concerns, I think there might be an attempt to sort of shrink the Bitcoin market. And then, of course, you know, the illicit finance, all that focus, it doesn't scare me. I just think it's a, you know, just from my experience of working in the government, I just think it's like something where the industry is going to have to be, you know, kind of be cooperative with the government. And I don't think, I just don't see the US government allowing, you know, sort of mixers or whatever to just move around millions of dollars that go to North Korea. And so I think it's going to take cooperation between the government and the private sector to resolve those issues.
Dina, I have to say, seeing the framework drop and your kids telling you they hate your cooking all on the same day sounded like a terrible day. But Dina, thanks for that. I really appreciate it. I want to peel back that a little bit. We all reference these kind of variety of concerns that are peppered throughout the quote unquote framework. Bill, I'd like to start with you. One of those that I had seen and tend not to see definitives around that other than the usual boogeyman is this idea of national security concerns associated. Why? Like, how does the market understand the government's focus on national security concerns, in your opinion?
Well, I mean, I think what they're seeing is how this is being used, right? And you know, when I can going back to being in government, right? The regulators, where are they hearing it from? They're going to hear it from, eventually they're getting this information from the agents on the street. Right. If they're Treasury or DOJ, and it's working its way up. So, oh my God, it's bad, right? Because Agent Callahan keeps telling me, you know, that all the drugs are purchased now with, you know, with cryptocurrency. You know, so with the proliferation, right, with crypto being used for ransomware, being used as a child exploitation, drug trafficking, you know, blockchain potentially being used. When we look at blockchain, one of the earlier presentations that we did run on another hack where we talked about the communication of blockchain actually being used to communicate between potential bad actors with the potential victim there. So I think those all relate to that national security issue. And so that's what they're hearing first, right? Yes, the industry comes in. I think the industry makes a point by saying, okay, look, this is all on a blockchain, it's public, you can track and trace it, but we can't discount it, right? Because it's still something that's real. There's still something that has to be confronted as well. And, you know, the bad guys, like I like to call them, right? They're not looking for this long-term sustainability, right? They're looking to make that money right now, here, now. So they're not looking out in the future like, you can track and trace it, but I'll be gone by then, or I'll turn to something else by the time that you kind of catch on to me.
Can I make a political comment really quick about illicit finance? So you know, there's been times in my career, like more towards the beginning of my career, where I thought some of the new anti-money laundering requirements, like some in the Patriot Act, for instance, were going to be onerous and, like, you know, not too much burden on like community banks and things like that, right? But, you know, this is from a practical perspective, you usually don't win. So opposing the government on national security, I cannot speak to the courts, but in terms of on the Hill and in the agencies, you usually don't win on these issues. Now, this is a big issue for the US that goes beyond just illicit finance. It's about the dollar remaining the reserve currency. And that's how we do a lot of our national security, is through sanctions. And, you know, so this is the government this is a big issue for them. And so, you know, this is one where after 9/11, I remember I was in Treasury. I remember all the big banks coming in and the government like saying, you're going to need to work with us. And, you know, I can't say they were thrilled with every single thing that went into the Patriot Act, but they recognized that they had to do that. And Kell probably knows, you probably know, Bill or William, you probably know better than me, you know, the banks, because, you know, the traditional finance many times is like working side by side with the US government in terms of watching for illicit finance, terrorist activity, and those types of things. And I know that's happening probably with some of the, Chainalysis or TRM or those kind of things. But I think, unfortunately, it's going to have to happen on a broader scale than it. And I know it's antithetical to the industry, but it probably has to happen on a more cooperative and broader scale. And to the extent that there are arguments about like tornado cash, etc., I don't think you can just be opposed. And I don't like that it was such a broad approach by OFAC, but I think you have to like kind of work with the government and come up with some kind of solution.
Dina, I just want to thank you for that. I just want to interject here because we've mentioned illicit finance and we've mentioned national security several times. I want to throw this out for the group because one of the pushbacks that we have in conversation with industry is how much sanction evasion is actually happening because of crypto and blockchain. I don't know the data. I'm sure there have been some reports on the data, but does anyone care to comment on what level of sanctions are using crypto to be evaded, or is it just kind of a bit of Washington, raise a flag, and things are really bad in the crypto space? Kell, did you have any thoughts? I know you and I kind of cross this topic occasionally.
We've looked at that in the past, and there's been various reports. You look at the actual fines against major banking institutions using, traditional fiat, whether they be here in the U.S. or abroad in Europe or other places. And quite frankly, the volume that is associated with traditional money laundering and other typical ways of going about that, is huge. And, I would echo the point made earlier that, all the industry is asking is to be held to the same standard. And just because you don't understand the technology and the benefits and other issues surrounding the technology doesn't mean that, okay, we're going to let traditional finance do things this way. But since we don't understand you and there's a shadowy supercoder behind you, then we have to ramp this up to the point of a much higher bar than really could be applied to you. And that basically at the heart of it perhaps is not equitable. And then if you look at other things, such as the broker definition that's being worked through by Treasury right now,
right?
And the potential with the law as passed that it would encompass miners, validators, wallet technology, and even software developers, right? And, there was an amendment that was tried at the very last minute and political games were played with that and it didn't get through. But fundamentally, parts of this technology do not correspond exactly with the laws. And the thing that needs to be done really is for someone who understands the technology to, be able to find, craft, or tune particular aspects to it. Just like was done for the internet with certain exceptions to, to get it going around tax and other things around, the speech and whether it's, a publication or not. I forget the exact terminology there, but instead we're being held to the older standards that don't necessarily map to this technology. And then those standards are held higher. So I think there's a bit of a disconnect. It is maybe calming down a bit. I still think that is an issue.
Kell, thank you. Josh, I want to bring this over to you. And certainly if you have a comment on that, please do. But I also want to talk about investor and consumer protections and securities. But Josh, I think you were going to say something. I apologize. I cut you off.
Oh, yes. I was going to say, while I don't have data on the actual amount of illicit finance that's being done, I do think that around the world, and certainly as a result of tornado cash, there has been a lot of chatter about, oh, the agencies really don't understand how the technology works. That's why they sanction tornado cash, right? As opposed to a person, an entity, or a property. And certainly we've seen the lawsuit that's being funded right now by Coinbase on behalf of 4 individuals, where they bring, where they talk about different kinds of use cases that are non-nefarious. So I do think in some ways, and certainly it's great that there were positive aspects of the report as well, not just the focuses on illicit finance, but I think coming out and emphasizing that illicit finance is a concern, I think part of that may be to say, no, we do understand. We do have a greater grasp. This wasn't a mistake, right? It wasn't a mistake, as some have said, that they sanctioned a smart contract, right? And so I think, yes, I agree with everything that's been said about needing to continue to find ways to move it forward, but I think that may be part of it. I think there was something else I was going to say, but I know what it was. It makes me think also in terms of messaging, and perhaps this goes somewhat to what you're asking about protection for investors and others. in some of the language about, the agencies will continue to work together, they will have greater communication, things like that, it does make me think about what we've seen outside of the framework in the interim, right, where the DOJ brought the case against the former Coinbase employee and relatives, right, and then the SEC brought a companion case, alleging insider trading and securities, and that certain of the tokens were securities, and then you saw the CFTC Commissioner Pham coming out and saying, wait, there needs to be greater coordination, and you saw legislators and others really firing back. So I think, as we all know, certainly from my view, or maybe I shouldn't say we all know, from my view, the gloves are off, right, among some of these agencies, and we've even seen people taking to the Wall Street Journal op-ed pages, Gary Gensler one day, exactly, or like, Brian Brooks another day, 2 days later, right? And so I do think maybe some of the messaging is to say, okay, let's have a comprehensive approach now. Let's all work together. But I defer to others on the panel who may be closer to the messaging.
Actually,
I was going to say, I think this is very, I think there's always that natural tendency between the various agencies, and that's been like that for, since I've ever worked on this type of thing, like who was going to be responsible for what. It exists on Capitol Hill between committees, right, with the CFTC versus the SEC. But I think this is extremely, I think this is very coordinated, and I think it shows that the White House and the Treasury are playing a leading role in sort of a comprehensive approach. I think that also if, both, and I have the Jay Clayton view of both the industry and the regulators need to work together. I think especially on illicit finance and some of these other issues, that there's this dynamic that if some of the companies won't play ball, that the U.S. would prefer to have these activities in traditional finance.
Thank you, Dina. Kell, I know you were going to say something as well.
Not sure of the exact, but I will start off. One other thing I forgot to mention at the beginning is the consistent appearance and encouragement of investigation into a potential CBDC. And I would just like to maybe clarify that for anybody who thinks that might be a crypto. It ain't. So what they're talking about there is perhaps I'm not going to say co-op or to kind of like, the camel under the tent or whatever that expression is, using this political capital to go forward with a digital dollar that will be centralized, that will be subject to everything, that will be issued by banks and will simply be digital in nature and thus have some more venues to go across. That is not, it won't be a form of stable coin. It won't be, great ones like USDC that are, migrated up to be utilized, at the federal level. It is going to be a centralized entity, digital dollar. And so conflating those two, I think, is a little bit disingenuous. So anybody who thinks that the advent of a CBDC by the federal government, and there's mentions throughout all the documents that I read, I think that's a way to move forward. And, mention of things like FedNow, I think it's an attempt to co-op and also to gather even greater data beyond SARS and CTRs and things like that, that the federal government gets in to track movements. And obviously the reduction in some of the limits for reporting financial transactions that are imposed by the IRS and Treasury and others. So I would be a little bit more circumspect when looking at that aspect when people go, oh, it's going to be great for crypto to adopt a CBDC.
Kell, I just want to peel that back a little bit because I agree with you. Are we? And is it too cynical for me to say that? Well, let me state this another way for the group. Are people entitled to financial privacy, or is this kind of eating further into the financial privacy that people suspect in the United States? And Kell, I know you and I have had conversations about this, but Kell, let's start with you. I mean, what are your thoughts there? And I'm going to go through the group.
I mean, my answer is yes. I'm not going to go any further than that because I'll be on a tirade.
And Bill, I'd love to come to you with that next, simply because given your perspective from a law enforcement background, the clarion call on the crypto world is you're eroding our financial privacy, and this is government more and more government control of our day-to-day lives. How do you balance that? What are your thoughts?
Yeah, I mean, I think it's probably more of a yes with an asterisk to it, right?
Yes,
In
ma'am.
the records book there, kind of going back to when I'm hearing again here and other places, the issue with tornado cash, right? We have built upon a system, basically a financial system that we share with pretty much the rest of the world. There's developed world here, is to know your customer, right? And that's what we have this philosophy here. That's the problem I see with the tornado cash. Not so much, I have come to learn, okay, there are reasons to use it, right? There are some legitimate reasons that it may be needed to be used to make payments. However, when we don't know who's even using it to begin with, I think that's where the problem lies. And then it gets into our financial stream. And I think that's, that starting point. So yes, if it possibly came from someplace that has know your customer requirements in place and then goes through a tornado cash, I think that'll be the eventual compromise, eventually, the sanction violations that we talked about. Yeah, I mean, the liquidity, right, for the total, we'll say that the Russians may need to get around it may not be there, because we're looking at this through our lens of looking at the financial system. I tend to look at things also through what liquidity is basically in the illicit market, right? In the UN, over $500 billion sits in illicit funds. So I think after, when things start to shake out, because that's when we'll learn it, right? We start arresting people, debriefing people, or down the road, is to learn about, okay, where is that illicit cash out there? As a illicit actor, I don't need dollar for dollar to survive. I need maybe 75 to 80 cents on the dollar to survive, and I'll go for that there. But as far as this notion, look, here in the US, right, we like to think we have privacy, we like to think we're secure, but we do have unreasonable search and seizure, right? And I'm not a lawyer, so I won't try to explain it, but I can get that financial information from you. So again, we talk about not treating this industry any different than we're treating the financial industry. So there has to be some level there that, okay, there is some reach, not that it's all out open and public to everybody, but there is a process that if the government, needs to get that information for an investigation and it's authorized through that, judicial party, then it's available.
Bill, thanks a lot. Josh, I wanted to come back to you on one thing, and it kind of alludes to something, Kell, that you had mentioned, and I'm paraphrasing, but you alluded to this kind of uneven approach from a regulation and enforcement perspective, and probably paraphrasing that, I think. Josh, from the perspective of regulators like the SEC and the CFTC, and I know you and I have had many conversations about this. Recently, Chair Gensler, I believe, stated something along the lines of, well, existing security laws work for crypto, and he presumes that all crypto or most crypto fall under existing securities law. What is your perspective on that? Does that law, do the securities laws that we currently have neatly fit what crypto assets and technology are doing? There are a lot of proponents in the crypto space that say, no, it doesn't fit. What are your thoughts there from a securities perspective?
So from a securities perspective, what I do think is that it's an imperfect fit in many cases, yet for the capital raising aspects, I think that there's the possibility of a lot more compliance than certain projects and folks are doing or have been doing historically. And I think it is sometimes, not always, but sometimes the view that, oh, there's a lack of clarity, or, oh, it's unclear. I mean, in my view, we've gotten the message, at least from the SEC for a while, about what the expectations are. I mean, if you look back to, for example, statements by Jay Clayton years ago, right, where he talked about, in the same conversation where he said basically every ICO he'd seen was, the sale of a security. He talked about how people should be doing capital raising using private placements, right? So there are certain steps, and there are certain ways in which I think compliance, is possible to a greater degree. I do think, of course, there are some instances in which it is an imperfect fit, right? And you may be analogizing to something, in terms of your communications. Should you be communicating as though you're a public company, making sure that you're batching communications to avoid, for example, having an impact on your digital asset price, things like that, material non-public information, and not trading on it. Like, there are certain analogies that I think we can draw, But I definitely think for the capital raising aspects, to the extent that you're fundraising using digital assets, as opposed to using digital assets that already exist for a different purpose, I think at least at the outset, there are lots of ways that we can find compliant paths forward. I do think briefly, if it's okay, just on the BSA point and that kind of thing, there was the language within the framework about potentially consideration being given to amending the BSA to apply explicitly to NFT platforms and digital asset trading platforms. And while I won't take a view as to whether that is good or bad, I can see why it may be something that the government has an appetite for. To Bill's point, one of the things that I think has come up a lot is the creep of the information that's been collected under the BSA over the years, and how initially it was a very small amount of information, account number, et cetera, name, right? And now we are giving more and more and more information. And so a lot of people have concerns about whether warrantless search and seizure, whether there really is a prohibition when you have this kind of creep. So again, I'm not taking a view on whether this is a good thing or a bad thing, but I definitely think it's something we need to remain aware of.
Can I comment on privacy?
Go for it.
So there is this, so there aren't absolutes that make sense, right? So we don't want to go in the direction of, I don't like the idea of central bank digital currency if it's very broadly defined. If it's running the rails as they exist today and interfacing and making sure we lead internationally, that's one thing. But I don't like the idea of central bank digital currency where the government can see everything I'm spending, has bank accounts for people. That is, I think that's terrible. On the flip side, I don't want to have no protection against terrorism and illicit finance, right? So this is not a one way or the other. There has to be a balance. And I think this whole privacy topic is ironic in a way because it's a huge issue right now, both privacy and antitrust, legislation, which never gets done, especially privacy because it's cross-jurisdictional on the Hill. This is a huge discussion that's bigger than this. And the reason it's bigger than this is because the more we're using sort of AI and other technologies and new fintechs and data, you don't even know how it's all being used. This is becoming, there's no good answer, right? So here's the thing, with all this discussion on Capitol Hill, on privacy, which never gets done, and on and antitrust, to me, we're not there yet. But Web3 and digital identification could solve for a lot of these things. And same thing, I'm not a technologist, but on the AML and the KYC, I would think that, at some point, and I think some of it's happening, is that those requirements could be baked into smart contracts. So I do think that there are solutions. And I do think that when you look at the bigger picture in Congress, in the bipartisan concern about the big tech, big banks, everything, just look at what's happened in the last couple of weeks. I mean, this actually offers Web3 is disruptive. It creates competition. And I know I'm going broader than privacy, but it really does address a lot of the privacy concerns.
So Dina, go ahead, Kell, I'm sorry.
It's funny because one of the original use cases for ERC 721s back in the day when that ERC was first released, which are NFTs now, was for identifying accredited investors for purposes of KYC and being used back in 2016 or so. Yeah. And then we got CryptoKitties instead. So that technology is.
Hey, wait a minute! I own some of those. I'm a cat lady, so I own CryptoKitties too.
I'm just saying that, if we had that public-private partnership thing, that maybe some of these emerging things that some of the great technologists come up with in terms of, one of the foremost use cases. I mean, some of the great use cases for NFTs were identifying particular financial instruments that were issued and tracking those and assisting in the sale, as well as identifying accredited investors for participation and things of that. So it's funny that something that was proposed, 6 years ago now, is something that, even now, when looked at from a prescriptive standpoint that the legislators and regulators are doing are probably still not aware of that could be used. And again, the only report that kind of supported doing this kind of activity, at least explicitly, was the Commerce report. So I find it a little interesting in that particular aspect. One other side question I had real quick is I was curious if the OCC is one of the agencies that'll be reporting, because I think we all know that, you know, during the couple of months of, you know, the summer of love when Brian Brooks was running that agency, a lot of movement forward happened that has been either kind of paused or even reversed a little bit or amended. And I'm curious if they're going to be participating or that's going to be behind the scenes. I don't know that.
So here's what I would say. So, and this, if you look at this, you'll see this all over the place in the document, is I know we focus a lot on the SEC versus the CFTC, but at this point, I think the viewpoint of the regulators, and I agree to some extent, is that the industry kind of has taken over the whole financial services universe and is not, you know, it doesn't necessarily, is not regulated, or some of it's unregulated, or it's regulated by the states, not regulated in the same way. So my point is, I see the banks becoming way more active. You will see that in the FSOC report, but also keep in mind that, you know, Janet Yellen, the White House, they have been saying that stable coins need to be regulated like a bank, right? Which is, you know, bank regulation is, you know, you may want to go back to the SEC once you like see bank regulation, right? It's much more onerous. And so the big issue is also, you know, there's legislation on the Hill, which I don't think there's enough time to pass it, which, you know, gives the Fed the authority to regulate non-bank stable coins, right? So you have that, and or the other agencies become involved. But you also have, you know, if Congress does nothing, this is why I say this report from FSOC is a big deal. They can start the process of designating stable coins as systemically important. The other component is like some of these, and I think it would happen for a variety of reasons during the lame duck. And another place where I see the regulators being more involved is in some of these products that are yield products. You can call, I mean, you can call them securities. Some of them look like it's a whole mix when it comes to DeFi. Mm-hmm. And so, you know, from my meetings, I would say the bank regulatory agencies will become more active. And if stable coins are regulated by the Fed, let's say, or the regulators, that just sort of changes a lot of the dynamic of the entire industry. If you think about it, like all of a sudden it's harder to decentralize those types of things. So I think I think the banking agencies, the CFPB, the FTC, I think we start hearing a great deal more from them in the next few weeks, but I think we see action being taken after the elections for a variety of reasons.
Dina, thanks so much. Thank you. I want to kind of flip the script a little bit, because one of the clarion calls for the industry for many years, and we've all been involved, has been, you know, this is regulation by enforcement. The government doesn't understand. And I read a really interesting op-ed piece, I believe it was in Bloomberg about 2 weeks ago, and the author had commented that when you hear regulators saying, come in, register, you know, tell us what you're doing, the organizations and the companies that are trying to comply are the ones that get beat up and get fined, and the illicit actors in this space don't care about those call-ins to visit the regulators. How does the industry need to approach this framework broadly? And every one of us worked with colleagues in the blockchain and crypto space across a bunch of different industry verticals, law and trading and banking and tax. Kell, I'd love to start with you. What are your thoughts on what does the industry need to do differently? It's not enough to just scream, give us guidelines, this is regulation by enforcement.
That's challenging. When you first said, how do they approach it? My first response was going to be with a good lawyer, yes. Which obviously is true, right? Yes. But, you know, I think it's very different, even though, you know, it seems like we have the same securities laws now with Gensler heading as Clayton was, but there was definitely some movement that was different back then, you know, where at the finance, Hinman, you know, announced that Bitcoin and Ethereum were sufficiently decentralized that they didn't count as securities. And now Gensler grudgingly says, yeah, I guess Bitcoin isn't, but I'm not going to say anything else about anything. And maybe there's a pathway to get an initial capital raise, which I think Josh might have been referring to, and then, get a letter around, a point where it switches if it's sufficiently decentralized at that point. And we've heard of none of that. And again, we have the same set of laws. We're having differing interpretations by the regulators there on that. So I think it's a little too dynamic. And, like we work with NFT marketplaces, crypto ATMs, exchanges, large banks, and others, and tokens and everything like that. Each one of these use cases from our accounting and tax standpoint have unique facts and circumstances. And so I think it would probably be, I don't think there's a general approach, because again, one of the problems with crypto that kind of challenges regulators is that what it is depends on how you use it, right? Did you buy ETH to keep it and appreciate it, buy ETH to put it into a liquidity pool? Did you, like a ton of entrepreneurs and small businesses that are trading overseas, buy ETH and then are paying a counterparty over in Asia so they don't have to go through, a week of waiting and all this kind of stuff, and $75 in fees to buy, a small crate of jeans to resell here in the United States. So I think it's hard to do it on a broad level. I think some of the industry groups, I've seen a lot of them come and go. I think the current ones are really trying to move forward, and some organizations and companies are getting lobbyists, and I think that's just the way it's gonna have to work as we move forward as an industry. I think those lobbying groups and concentrated, durable industry associations that build those things, if we can give some more horsepower to people like Coin Center, I think that's fantastic. But it's gonna have to be through a concerted effort of everybody for a particular company with a particular use case. I think it's going to be very facts and circumstances.
Let me talk about the lobbying. You just opened that up. So the lobbying, I would say, is so I was very fortunate in that my first company was a registered. They had to go through a process, but they were a registered ATS and broker dealer that could trade digital assets as securities back in 2017. They were before their time, right? So so on the lobbying, what I would say is the reason. The groups are newer than like the establishment, like traditional finance. The banks and those guys, they know what they're doing with everything. They are experienced. My gosh, the private equity industry did great during the Inflation Reduction Act. I would hire all those people to lobby for this. But here's the issue. The issue is different people are, first of all, the groups keep moving around. Different people, when you're on the Hill and different people are telling you like different things and they're all over the place, you throw your, and especially if it's like industry to industry for Republicans, you throw your hands up and you're just like, I don't know what to do because I can't there's nothing I can really come up with here. So I just like give up. The other thing is the industry has a tendency of opposing, just a pure opposition. And that makes sense in certain instances, but you have to offer solutions. And when I say offer solutions, you have to offer concrete solutions. Like, they sometimes want a draft of the legislation or a draft of the regulation with a description, right? So you got to be offering like something real. And
Dina, thank you. We're running up on a clock, and I know we've got a couple other questions and comments. And I appreciate that, Dina. Josh, I know you wanted to add something to the come in and talk to us thing. You've lived it a lot, as I recall, but over to you.
Thanks so much. So I will say, I realize that everyone has different experiences. And so I would never, and also that reasonable minds may differ on their assessments of things. In my experience with certain clients where we've been going to the SEC for literally years, I don't think that it has had a bad effect. In fact, I think it's had a very good effect. I think one of the keys has been going in early, right? Going in early and really sharing what your plans are, and discussing in a way that maybe people are not familiar with. And I to Kell's point, with a good lawyer, right? Not by yourself. But certainly I have seen the SEC be very helpful in terms of providing feedback about proposed plans and ways to help make them more compliant. I mean, much more helpful than I would have expected. And to the point about no action relief and capital raising, I mean, while certainly we are still pursuing no action relief, definitely, there are certain instances in which project that has been with me at FinHub for a number of years now, where I am very confident, and I have said this to FinHub, that I believe that the token has morphed from a security to a non-security. Now, given the climate at the SEC and the enforcement emphasis right now, I don't know that a no action letter would be forthcoming in the near term, for example, but I know that the FinHub staff knows that we are very comfortable saying that this token is software and that it has gone through the morphing process. So I will say a lot of that is very unsatisfactory to the industry in general, because people don't want things to happen behind closed doors. And that's why I do think it should be more open. But I just want to say there are positive examples out there. They're just not publicly described.
Josh, Dina.
That's my experience as well as Josh. That's why the SEC has been fine. But I know other people have had different different experiences. And the SEC, the last time I was meeting with a trade association, they were pretty blunt about what they want. Whether they will get it or not is another thing, but they think that cryptocurrency, to the extent that retail investors are invested in it, that it should be traded on national exchanges. And they want to develop this process to get everything onto the exchanges. What happens legally with that, I don't know, but that's where they are.
We're running up on time. Dina, Josh, thanks. I tend not to do, hey, give us your predictions or your prediction as last comments. But Kell, I want to start with you. What happens post this framework, and are we affected in your mind by the election coming up, for example? Where do we go next as an industry?
I mean, obviously, I don't think anything really gets passed this year, as Dina mentioned, but I hope there's more. I hope we see something, there's report that's rumored from the SEC to come about. I do think everything's coming together to put together a framework of this nature. And this is kind of an out there thing. And I'll try to say it quickly. I think at some point, with the EU and MiCA and some of the other regulations that they passed over there and what the way it looks like it's framing up here, I think we may end up with a slightly or a bifurcated crypto ecosystem, wherein, we have the incredibly regulated and assured, and you see some of that even in the DeFi with whitelisted Aave and other things, ARC, I believe it's called. But you might have more of a in the wild area for, the entire continent of Africa, South America. There's huge swaths of the world that will be able to work and include things like financial inclusion and grow crypto protocols, wherein at some point when they become, financially solvent enough to come in and spend the $10 million to start to comply and open in the US or the EU, that then they'll become one of those or a variant of their ecosystem or protocol could be. So I think we're kind of moving toward that we'll have, the wild area where things can innovate, and then the more regulated ones in the US and the EU.
Thanks, Kell. Bill, you agree? We're going to have the wild areas from a law enforcement perspective. There's a lot of wild areas out there.
Yeah, I mean, I think there's still going to be that wild area, but it's more tamed. I think, one, because I just think the market is shaking out that wildness. And there's more grown-ups in the room, just with the way the market is going. I agree in the sense that probably this congressional period, nothing's going to happen. However, it does act as a roadmap. It does act as a framework for the agencies to work off of. And to allow them, I think, to go full bore on it and okay, let's explore, let's set up teams as far as enforcement end goes, and hopefully there'll be something down the road as far as more funding and resources for them.
Bill, thanks so much. Dina, last closing comments, couple of moments.
Yeah. So real quick, I will do positive, negative, or negative, positive. So on the negative side, I do see probably FSOC acting in the fall and starting to designate things as systemically important. That could mean that certain products that exist today on this are treated with more regulation than if they weren't running on a blockchain. And that's very unfortunate because the technology is rapidly changing, and a lot of what we're talking, like what proof of work, proof of stake, we're going to be something else, right? On the positives, I want to end a positive, which is I am really excited about what's happening with Web3 and all the different innovation that we're seeing there. It reminds me of when the internet when all those different startups that still continue to amaze happened. And so I think to the extent that we get some certainty and knowledge from folks that we are going to see some amazing things in the future.
Dina, thanks so much. Josh, last word from you. What's next? What do you see coming down the pipe?
So, I mean, well, one thing I see is that the government realizes at the highest levels that crypto is here to stay, right? So I think we will start to get the rules that people have asked for. To someone else's point, it may have been Dina. We'll see if people are happy with what they get. But I do think that this is a great moment for us, even though this might not be a framework that is immediately operational. I do think it is showing that the US wants to be a destination for digital assets. It's going to be a destination for digital assets, and parties are committed to bringing forth a comprehensive, cohesive, coherent approach.
Josh, thanks so much. Kell, Bill, Dina, Josh, always a pleasure having you, always a privilege. Your thought leadership is amazing. Thanks for being part of this. For all of our audience attendees, if we didn't get to your questions, and I know some of you were emailing me questions, thanks for that. We'll try to respond to them separately, but we'll end it there. Thank you again so much, and we'll chat again soon.
Thank you so much.
Take care, everyone. Bye-bye.
Thank you.
Bye.